Hey, so who do we have here today?
Hello, hey, you have Jessica Azor, aka Jess The Investor.
Hey, so Jess, I have three questions for you uh, to help someone out who's basically coming into investing. You ready?
hmm
All right, so the first question I have, what inspired you to start investing in stocks and how did you build your confidence in the market?
Yeah, so I was in real estate and I did really well with real estate and I had a lot of capital and I wanted to flip my capital. I wanted to do it just with something like being at home, having Wi-Fi with my digital devices like my phone. That's what I started with. And after getting, some 100% gainers, after turning, $2,500 into 5,000 in one day, I wanted to continue that. I wanted to prove to myself that it was not just luck, that I could repeat it.
And that's a great question. And number two, when analyzing a stock, what key factors do you look for before deciding to invest?
Okay. So I do trade them. I don't hold on to anything, so I don't invest long term like most people are familiar with stocks. They'll buy like Facebook or Apple, they'll hold it because those stocks statistically over time they go up. But if I tell you that I trade stocks that over time they go down 99.9%, meaning that if you put $1,000 into it, after 5 years you'll have $1, you'll be like, why are you trading those stocks? Well, the reason is because in those times when they're going down, there's going to be a day or 2 days out of the year. They're going to be random and they're going to be sporadic where they bounce up. And that's called a dead cat bounce. I don't know why it's called that, but that's what it's called. And basically, when it bounces up, if you think about it, if a stock goes from $20 to $10, that's a $10 move. If you're shorting it, you're going to get 50%, right, on the downside. If the same $10 move happens on the upside, so it goes from $10 to $20, you actually get a 100% move. So you can actually get more of a move going on the upside than taking it short. Also, when you're shorting, you're going to lose, you can potentially lose more money than you put in. I can show you stocks that have gone up 2,000%. So if you shorted when it went up its first 100%, you could be down another 1,900%. So if you shorted it at 100%, thinking, okay, it went up 100%, I'm going to short it now. And let's say you put $1,000 into it, you can now be down $19,000, even though you put 1,000. However, with my strategy, when I'm going long, even though these stocks historically go down, the day that I do trade these stocks are going up 100%, 200%, even 2,000%. I've seen a stock go up 2,000% in 23 minutes. So, and I unfortunately shorted it at 800% thinking it was done. And however, it went up 2,000%. So I got stopped out. But, anyways, you can take stocks either direction, on the short side or the long side, but I'm specifically trading stocks that have a lot of volatility, that go up a lot in a short amount of time. And yeah, maybe eventually I'll start having a long term portfolio where I invest, but for now, I'm mostly just trading. I try to close my position within 24 hours.
Hmm. And then the third question, for someone just starting out, what's one mistake to avoid and one smart move to make early in their investing journey?
Yes, so I highly, highly recommend you think about your losses. I know nobody puts money in the market thinking you're going to lose, but it's going to happen. And if you're not prepared to lose, you won't know how to lose. It's just like anything in life. If you don't prepare for it, you're just going to leave it up to luck or worse, your panic emotional reaction because you have money in the line. So, risk management is extremely important and also account management. So, um, the biggest mistake people make is thinking that they're not going to lose and not preparing for it. And so you'll win, but your losses will be bigger than your wins. And so let's say you win $100, but your loss is 500. You have to win 5 times just to make what you lost that one time. And that's a lot of even my hardest hurdle to get over. I can be at a 90, can you believe it? I'm at a 90% accuracy rate, and you can be at break even or even negative just because your losses are way, way bigger than your wins. And so trading is a mix between your risk to reward ratio and also your win rate. But your win rate is not the only part of that formula to determine your success. So when you're looking to be successful, make sure you learn how to lose and make sure you're okay with losing. Don't make that part of your identity. Everybody loses. most athletes lose more than they win. The best one, Steph Curry, for example, I give that example all the time. He's the best 3-point shooter, yet he misses more shots than he makes historically. He's only shooting, I think, 40%, meaning he misses about 60% of his shots, yet he's the best of all times. So I can go on and on, but he's not afraid to lose in a way, right? To miss more shots than he makes in front of millions of people. And so for you, you have to get over that fear of losing. And once you can and you accept your losses, you'll be able to take better risk and you'll be able to make more. I would say the best thing for people to do to ensure you win outside of risk reward ratio is to find a really good strategy. You want a strategy that works majority of the time. Even if that majority, the edge is 51% of the time, if it works 51% of the time, plus you have a good risk reward ratio, it's almost impossible for you not to be a good trader, not to be a profitable trader, because you can wake up every day, trade, and be losing money. So you want to make it worth your time. Anyways, that's the best way to win and lose.
Thank you so much for your time, Jessica. Where can people follow you at?
You can follow me at my Instagram, Jess The Investor. You can follow me on Facebook, Jess The Investor. You can follow me on TikTok, Jess The Investor, except the part has TH, 2 E's. You can also follow me on YouTube. Definitely follow me on YouTube, Jess The Investor. That is where I will be doing a long form review of where the stock cycle 100%. So thank you so much.